All right. Happy to be here with my longtime buddy and host of the Peter Schiff Show podcast, who's kind enough to take an impromptu slice of his day to talk to me today. My friend Peter Schiff, how are you, sir?
Chris, I'm doing good. I'm just hanging out here in Connecticut, spending some time off in my old stopping ground before I moved to Puerto Rico.
Permanently?
Yeah, I moved there about 10 years ago. It'll be 10 years in Puerto Rico in January. I'll be there 10 years.
Wow. Okay. And then so you're leaving Connecticut though permanently, you mean?
No, I did. I left permanently 10 years ago. I kept the house that I was in. And so we come here maybe 6-8 weeks a year and use it,
Cool. Awesome. Well, listen, I wanted to talk to you today because of what's going on with MicroStrategy and with Bitcoin specifically. And, I think the whole world knows your stance here. And that's not going to come as any surprise to anybody. I was out for a long run today. I ran for an hour and I listened to a good majority of the spaces that you did 2 nights ago, where you talked about strategy and you talked about all of your predictions for how it is going to, implode in the future. And I'll start by saying, what we're covering here is just both of our opinions. I'm not a financial advisor. I don't have any registrations or licenses or any of that kind of stuff. And we're just kind of talking about our opinions here. Your opinion is that this company is going to implode. I thought to play devil's advocate here for a second, because I'm a skeptic just like you are. And I think you've got it right on the preferred product for sure. I was one of few people that knew you had it right with Alex Mashinsky back in the day with Celsius. That was about 8 months before he wound up getting indicted and that company imploded. And me, just as a short seller and a general skeptic, you see an 11% yield, with a 3% effective funds rate, and somebody's taking some tremendous risk somewhere to make up that yield. Where I thought to boil down the controversy in your last spaces and get right to the point, where I thought the misunderstanding was between you and one of the more strident advocates that was arguing with you was the assumption that the company is going to implode, which was your word, imminently, and B, you guys didn't discuss the fact that his argument for the company having a runway of cash and your argument and, the ability to pay dividends, for years and years and years, that it's not going to be an imminent implosion. And your argument that the company is going to collapse unto itself, both rely on Bitcoin either going up or down. And that was the one thing you guys didn't discuss. You assume it's going to go down, and that's what the premise you're making your argument on. And this gentleman assumes it's either going to stay steady or go up, and there you have the argument. Okay.
Obviously, if Bitcoin goes way up, Saylor gets out of jail.
Right.
But that doesn't change the fact that, and this was an argument I was trying to make with this guy, that over the past 3 weeks, the actions that Saylor has taken have reduced the Bitcoin per share that Strategy owns.
Right.
So he makes a big deal out of the fact that he bought Bitcoin 3 weeks in a row. But as a result of those buys, shareholders actually own less Bitcoin than they would have owned had he not bought any. So the question is, why is somebody doing this? He is running the company, yet he is deliberately undermining the value of the stock, right? The common stock. And he's not doing it to pay the dividends to the on the preferreds. He's just doing it. So why is he buying Bitcoin? He's buying Bitcoin to prop up the price of Bitcoin, because he knows that if he's not going to buy Bitcoin anymore, the Bitcoin price is going to fall. Because Saylor's buying is a big part of why other people are buying. It's a big part of the support underneath the market. And he knows that if he doesn't buy, even if he has to destroy shareholder value to do it, that Bitcoin is going to go down. Now, that would bring me to the next part where this guy got it wrong. He's talking about, they can pay the dividend. Well, if they don't raise the dividend, which they would have to do to get the price back up to 100, right? If they want to get the price back up to 100, they got to raise the dividend substantially. But assuming the dividend stays at 11.5%, in fact, I think they have to raise it by, I think if it's below 95 for 30 days, they need to raise the dividend to get it, Now, I think they can do it a quarter point, or I forget it is a half point. They don't have to jack it way up, but they got to jack it up a little bit. Or they suspend it completely, which obviously
I think they can. I read the prospectus for the preferred, and I think they can just suspend it anytime they want.
Right. But if they suspend it, it compounds at the rate that it was at when they suspended it. So it still becomes an obligation that would have to be satisfied in liquidation of the company. So it further subordinates common stockholders to the preferred stockholders, because not only do they get $100 a share in bankruptcy, but they get all their missed dividends. So it really takes the common stock and makes it really worthless. And by the way, as long as there's dividends that haven't been paid on the preferred, the common can never get a dividend. And so what's a stock worth that can't even pay you a dividend if it wanted to? And also, if there's any dividends that haven't been paid, he can't do any stock buybacks. He can't buy back stock. You can't buy back stock until first you pay all your arrears dividends. And buying back stock would be a smart thing when it's trading at like a 30, 40% discount to NAV. You'd think he'd want to buy back stock, but he wouldn't even be able to do that. But here's the point I want to make. He only has cash to cover his obligations, and this guy conceded that, for maybe about 7-8 months at the 11.5%. So what is he going to do when he runs out of cash? Now, this guy's point was, well, he has all this Bitcoin. He has years worth of Bitcoin that he could sell. Well, he tried to sell 32 Bitcoin and the market tanked. What would happen to the market if he had to pay the yield, which is almost $2 billion a year in obligations? What if he had to sell $2 billion worth of Bitcoin a year? Where would the price of Bitcoin be? Much lower. And in fact, the lower the price of Bitcoin, the more he has to sell to raise the $2 billion. So the fact that he has to sell, that in and of itself is going to put a lot of downward pressure on Bitcoin, because people know he's got to sell. And they know the lower the price, the more he has to sell. Right. He can't sell less. He has to sell more as the price goes down. That is a dangerous situation to be in. The market knows you're in that situation. And so they're going to, the shorts are going to jump all over it. The longs are going to get out ahead of him. And also the only other way he could raise money would be to sell more common stock. But the discount is now so wide, he would issue more debt. Yeah. What? He can't issue more debt. Who's going to lend him money?
People have been lending him money thus far, though.
No one's going to lend him any money anymore. They were paying him 11%. He was paying 11%. But now the stock is down 30%. That you lost over 2 years of dividends. The funny thing is, not funny. I mean, this is why he's going to get sued, or he said that stretch where the Bitcoin volatility was gone. That it was, if you wanted to have some Bitcoin exposure without the risk, without being subject to the volatility, you could buy stretch and just take the 11% yield. That the volatility
that statement rests on top of the assumption that Bitcoin's going to continue to go up 30% every year before he said that, we stripped the volatility out of it. What he's going on, and why this whole premise is flawed, why it's flawed, and I also believe it's flawed, is because he's going under the assumption that it's going to go up and 30% per year ad infinitum, which is not a guarantee.
Even though Bitcoin is lower today than it was in April of 2021, that's over 5 years ago. So you have a 5-year period of time where Bitcoin has gained nothing. But the point is that he won't be able to sell common stock because he'll destroy shareholder value and he opens them up to lawsuits. You can't sell $1 to go, or you can't sell $1.50 to go buy $1. That's what he'd be doing. Right. I mean, he's destroying his own company to avoid having to sell Bitcoin, because he knows if he tries to sell Bitcoin, the price is going to crash. And so that is why I think it could implode right now. Bitcoin's chart looks horrible. If Bitcoin doesn't hold this 60,000 level, it's going to go to 50,000 at a minimum. But if it doesn't hold 50, I think it goes to 30 at a minimum. And he's in a lot of trouble. He's already down at the current price. He's down like $11 billion on the Bitcoin he's already bought. But the other, he's going to have all this liability. He's going to get sued. Where is he going to get the money to pay the judgments? He's going to have to sell Bitcoin, because I think that anybody who bought Stretch, number one, for sure, will win a lawsuit to recover their losses, as long as they frame it correctly. Why did you buy it, sir? I heard Michael Saylor on CNBC. I heard him on the so-and-so podcast. I follow him on X, and he assured me that it was safe. He assured me that it was appropriate for retirees who need income, that it was okay because the principal was being preserved, the risk had been stripped out. He convinced me that it was like a savings account or like a CD. That's the only reason I bought it. You win. He's dead. He violated SEC. SEC should be all over the guy. He should, and this is direct exposure to strategy. You see, that's number one. But then number two, I think even the common stockholders have an argument, because they're down even more money, right? The stock is down over 80%.
Right.
Now,
and he'll have to sell that stock at a discount at some point.
And now, how did he? What he did the last few weeks is shareholder liability in and of itself, right? Deliberately doing that. But here's where I think he's got exposure to the common stockholders. He hyped the stock up and hyped up Bitcoin in a way that I also think violates the SEC, because he's not a regular Bitcoin pumper. He is the CEO of a New York Stock Exchange listed company, Strategy. So he is regulated by the SEC. Bitcoin is not. Bitcoin is not a security, but MicroStrategy Strategy is a security. And there are all kinds of laws about what you can say when you promote securities, right? Now, he goes out there and he says, Bitcoin's going to 10,000. 100,000. My worst case scenario. He'll have 3 scenarios. Worst case, most likely, best case. The worst case is Bitcoin goes to like 5 million. I mean, it's just so insane. So he has these pie in the sky forecasts and all kinds of bullshit about why you're going to get rich. He's obviously, this is self-serving to promote Strategy, because Strategy owns Bitcoin. So when he's out there saying, Bitcoin's going to 10 million, 20 million, blah, blah, blah. It's the greatest thing in the history of the world. Everybody, he's promoting his own stock. He's a stock promoter. Now, he's telling people, not only should you buy Bitcoin or Strategy, you should take on debt to do it. You should mortgage your house. You should take a loan against your business. You should borrow on your credit cards. Even once he said you should sell an organ.
Sell a kidney.
Sell your kidney.
But don't sell your Bitcoin.
So could you imagine if I was out there telling people randomly, go out and mortgage your house and buy my risky stock. This stuff. So if you did that, if you're just some old lady and you didn't know any better and like, wow, I trusted Michael Saylor and he was on CNBC all the time. He must know what he's talking about, and they respect him so much, and they all love the guy, and so I assume he's legitimate. He wouldn't lead me astray. But I know from being in the security industry, it's arbitrators or however it's going to go, or if it went to a jury, or if it's not even an arbitration, the company is going to lose. These people the people who lost their money are going to win. So it's not just that Strategy is going to have to pay 5 or 6 billion in actual debt that it owes. It actually has tranches of debt, not a convertible debt. None of it's going to convert because the conversion price is way to hell up there, right? Everyone's going to want their money back, and they're going to want it back early. There is a window. Each of these notes, you can put the security back to Strategy and get your money, and everybody will. So over the next, I don't know what it is, 3 years, 4 years, all that money is going to have to be repaid. He has one way of getting it, selling his Bitcoin. But if the shareholders that lost money win,
selling MSTR shares.
Right, but that's already I mean, that's way at a discount. Bitcoin
right,
is,
but I'm just saying he doesn't only have the one way. There are other ways he could do that.
Right, but let's say, but this other guy is talking. He's got the Bitcoin to sell. If he loses and he has a 5 or 10 or $15 billion judgment against him, the company, they got to sell the Bitcoin for that. And I just think that, look, Bitcoin can easily go to 30,000, 20,000, 10,000. If Bitcoin goes 10, 20,000, because the lower Bitcoin goes, the more people are going to lose in Strategy and Stretch.
Right.
Which means the bigger the judgment that's going to be awarded to the victims of his fraud, right? So Bitcoin going down anywhere near 20,000 pretty much guarantees that the lawsuits alone will wipe out Strategy. The judgments alone. Forget about the debt. But when they go into bankruptcy, the debtors get paid off first. Well, first, before the debtors even get their money, I think the guys who win the lawsuit, they may be senior to the bondholders. I forget. They're definitely senior to the preferred. But before the common stockholders get anything in the bankruptcy, the victims who sued and won have to get made whole. The bondholders, the convertible note holders, have to get made whole, and the preferred shareholders have to get made whole at 100, plus any dividends that they hadn't been paid. So a drop in Bitcoin to 20,000, let's say, guarantees that Strategy stock is worthless. It is worth zero. The common is worth zero because the company will be bankrupt unless Bitcoin comes roaring back really fast.
Right. And I just want to stipulate that because a lot of these situation scenarios, for example, like the litigation that you're talking about. I mean, this litigation, even the quickest, swiftest class action lawsuits take 12 to 18, 24 months to play out.
Yes,
so
but the stock market.
Hold on. So these scenarios and the debt maturities, like you were talking about with that other, and I'm just trying to play devil's advocate here, though. These are years out, and we need to stipulate that if the price of Bitcoin recovers, and you're wrong about the price of Bitcoin, that he will be able to continue with his strategy going forward.
Look, if Bitcoin goes way up, but obviously, let's say lawsuits are filed next month against Strategy.
Right.
And the exposure is tens of billions of dollars. Yes, it may be years before he has to write a check, but the markets are going to start discounting the possibility that he does right now.
And that's a fair point. You made that point about Stretch. You said, well, why is it already trading at 75? And the guy was like,
know that they're not
I don't know. And you're like, because people already perceive the risk in the future.
Right, because at 75, you're getting a 15 to 16% yield, even if it doesn't go back to par.
Right.
But here's the thing. Bitcoin was able to go way up when Strategy bought or spent like $60 billion buying it, right? If he's no longer buying any, which he won't be able to do, why would Bitcoin go way up? What would be the impetus without Strategy? without the biggest buyer, who is potentially a big seller to pay, to cover obligations, to cover lawsuits, to cover debt. And I also think, look, the big buyers other than Saylor were the ETFs. I think ETFs are far more likely to be net sellers going forward than net buyers. They none of these guys are really making any money in Bitcoin.
Yeah, and they're at the behest of what the ETF owners do. It's not like the ETFs can hodl with diamond hands and just sit there. If those ETFs start experiencing outflows, they have to sell their underlying collateral.
Now, who owns the ETFs, right? Because the ETF buyer in general is not a Bitcoin maxi, die hard, I'm taking my Bitcoin to my grave, right? These guys, these fanatics, the cult of Bitcoin. Because if you're really a Bitcoiner,
the one guy you were arguing with at your spaces 2 days ago, as you were arguing with him, he's like, I'm holding to zero. I'm holding to zero. And I'm just thinking, like, what kind of an investment thesis is that?
It's a cult, right? So the people that really get Bitcoin, and I get Bitcoin, the benefit of Bitcoin is self-custody. You're your own bank, no third party. Not your keys, not your coins, right? So the people that own the ETFs, when did they start buying it? The ETFs didn't come around until 2021, right? 2022. Bitcoin was already 40, 50,000, right? Most of the ETF owners are losing in their Bitcoin. They're not making money. Meanwhile, they're making money in other speculative assets, right? There's a lot of stuff that's done well, while Bitcoin has done nothing. In fact, gold and silver have done a lot better than Bitcoin. So tech stocks have done better than Bitcoin. Gold and silver have done better than Bitcoin. The people that own the ETFs bought it as a trade. They bought it because of the hype, because everybody said it was the new thing. They FOMO'd into it. Now they've been in it 3 years, 4 years, 5 years. They're not making any money. They're losing money. Saylor's blowing up, all this stuff. They're going to sell. It didn't work out. They were promised. Look at all the forecasts. When people were buying Bitcoin a year ago, 2 years ago, 3 years ago, where was it supposed to be now? Was it supposed to be at 60,000? No, it was supposed to be 200,000.
Tom Lee said 250,000 for this year. That was Tom Lee's prediction.
Yeah, I mean, of course, and these aren't even predictions. These are just lies. This is marketing. This is hype. There's no rational basis for these. Where did you get that number, Tommy? He pulled it out of his ass. There's like no way that you could justify it based on the way you would predict a stock. You would say, well, I expect earnings growth of X,
right?
And I expect multiple expansion. You can justify a price target. How do you justify anything for Bitcoin? I mean, it's just all bullshit. But so you're going to have net sellers. So you eliminate strategy, the biggest buyer. Now you turn the other big buyer into a seller. Then also there's a lot of other copycat Bitcoin treasury companies. I think strategy blowing up is going to destroy the entire industry, the cottage industry. I mean, look what happened. An example of, I don't know if you've ever followed this one called Nakamoto, which is,
no, I haven't.
So David Bailey, who runs Bitcoin Magazine and who runs the big Bitcoin conference every year, who I know, he lives in Puerto Rico. So I spoke at his conference, not this most recent one, but a year ago. So 2025 in Vegas. And when I was there, and Saylor, of course, did the keynote, and he launched this digital credit crap, and I said it was bullshit back then. And he was telling people from the stage to mortgage their house and take out a loan against their business, right, to buy Bitcoin, when Bitcoin was $110,000. It was $110,000 when he gave that keynote speech. But they rolled out this stock Nakamoto, which was a Bitcoin treasury company. It's been a little over a year since then. Stock's down like 99%. I mean, you've pretty much lost everything if you bought it. It has been a complete disaster. So I think the entire Bitcoin treasury business is gone. And Bitcoin treasury companies now own 15 to 20% of all the Bitcoin, including strategy. but they've been made buyers. So I think they're not going to be buying anymore. They're going to start selling. So the Bitcoin treasury companies are going to be sellers. There's going to be no more new ones. The ETFs are going to be sellers. Strategy's going to be a seller eventually, but right now it's really not a buyer. So where is the new buying going to come from to get Bitcoin to go up? Who's going to buy all this Bitcoin that's going to get sold? There's not enough real true believers. I think anybody who really believes in Bitcoin already owns it. I can't imagine like somebody discovering it for the first time. There's been so much news. I think that anybody who wanted to buy Bitcoin already bought it. And people like me who don't want it, the fact that it's gone down so much, that's not going to make us decide to want it. Oh, I didn't want Bitcoin, but now that it's 60,000, I'll buy it. No, I don't care. 50,000, 20,000, 10,000. I know that that's still expensive. I don't care that it's down 80% from its peak. It's still 100% more than I think it's worth. Right? I don't think it's worth anything. So the people that think Bitcoin is nothing, they're not going to buy it for 20,000 or 10,000. So the only hope is the government buying it. That's the only hope.
Right.
The U.S. government. And now, why would the U.S. government buy it? There's no rational reason other than to bail out the people that already own it. Trump has a lot of friends that are in crypto. His family, his sons are in crypto. His big donors are in crypto. His cabinet is in crypto. They have a strategic reserve. So the only wild card is the U.S. government buys Bitcoin. Now, that would probably be one of the worst things that Trump's done. He's done a lot of bad things. But to basically take taxpayer money and bail out a small group of investors because they donated to your campaign or because their last name is Trump. Look at Trump's own company, DJ Media, DJT. That stock hit, I didn't check it today, but yesterday it hit a new all-time low of $7. It was a few $100s at its peak. It's down 96% or 94%. And one of the reasons it's down so much is because they bought Bitcoin. And why did they buy Bitcoin? Because they didn't have a viable business. So they decided to become a Bitcoin treasury company. They only make Truth Social, despite the fact that the president of the United States is on Truth Social all the time. That's the only way he talks. The total revenue from Truth Social, I'm not talking about profits. They don't make any profit. They lose tens of millions a year. They only have about 2 or 3 million a year of revenue. That's it. That's all their revenue. I got way more revenue than that.
All right.
I mean, that's nothing.
Well, let's just go back. I don't want to like mission creep here into other stuff. I want to sum up like the case that you're trying to make and clarify just a couple of things that I thought were missing from your last discussion. And again, I'll just say, first off, if Bitcoin does find a way to go up, if it makes it to 150, if it goes back to 200, whatever, Saylor will be able to slip his way out of this. So everything rests on the assumption that it's going to keep going up for the long term. And that is basically what everybody who's involved here on the long side is clinging to. So that's the first thing. The second thing is your point is the further down that it goes, the harder it becomes for him to protect. And because he's one of the biggest owners and has been one of the biggest buyers, when that engine starts to shift into reverse and he becomes a seller or stays neutral, even if the price stays neutral now, he's going to have, a year or 2 or 3 or whatever of runway in cash to pay his obligations, and he may be able to sell some common stock at a discount. So if the price stays the same, it's not going to be an imminent collapse for strategy. But if the price keeps moving lower, the speed with which this unravels starts to kind of move exponentially.
That's
quicker.
my point.
And we would call it a death spiral in like
that's what I call it.
Right.
I called it a death. I don't know if you got that from me or what, but maybe it's
No,
just great
people have been
minds think
saying that
alike.
about stocks and debt for a
Yeah,
long time, Peter.
yeah. I didn't make up the.
Not everything comes from Peter Schiff.
I didn't coin the term death spiral. I just applied it. but look,
Right. No, but that is essentially what you're describing, right? Like selling the common at a discount, decreasing the Bitcoin yield per share, which the CEO Phong Lee I published on my Substack a couple of times, where he basically said that is the objective of the company, to increase that one key performance indicator, and that
yeah,
is now coming down too.
and that's why when Saylor does his X posts every Monday about how much Bitcoin strategy bought over the prior week. Up until 3 weeks ago, he always reported the Bitcoin yield year to date. He
Mhm.
stopped doing that because for the
Right.
last 3 weeks, the yield to date has gone down. He has deliberately reduced it.
Right.
But look, the reason that I think that assuming Bitcoin is going to go up is irrational relative to the assumption that it's going to go down. The assumption that it's going to go up is based on the performance of Bitcoin since inception. So it
Right.
came out 18 years ago, it was pennies, and it's gone way up over the long run. And so that's going to continue. And I say, look, you can't assume that trend is going to continue
But it's also
when,
based on adoption and money printing and inflation.
right, but there's nothing that says that the money that's printed is going to be used to buy Bitcoin, right?
Right.
But anyway, the last 5 years, Bitcoin is, let's say it's gone sideways. Yes, it did briefly make a new high of 120,000 in the aftermath of Trump winning. And I think if Trump had lost the 2024 election, Bitcoin never would have seen 100K. I don't think it would have had the momentum. What really drove it was all the hype surrounding the strategic Bitcoin reserve, the Bitcoin president, that Donald Trump was going to be Bitcoin friendly, that the whole administration, Trump said, I'm going to make America the Bitcoin capital of the world. Look, my kids have just started a Bitcoin company. People wanted to be on board with the president. They, and they thought that he would help steer capital into Bitcoin. And so that, and I even heard a lot of the promotions at the time, and it was all relying on the White House and Trump. And like, yes, this is why you should buy Bitcoin, because Trump says it's great. Trump says you're going to get rich. Trump said never sell your Bitcoin. They were playing that campaign commercial, right? So apart from that little move up and down, Bitcoin is, let's say it's gone sideways for 5 years. Why are you going to assume that that's going to change? Maybe the last 5 years are more indicative of the next 5 years than the 10 years that preceded that. Because
certainly, if you think risk assets in general are overvalued and the market is due for a pullback, which I sure do. Even I think there will be a sharp kind of deflationary move lower even before they can start printing again, and that hits the market with an 18 to 24-month lag. But go ahead.
That most of the big gains, the really, really big gains in Bitcoin, the reason that there's so many Bitcoin billionaires and is the big gains happened early on. Right? When Bitcoin went from $1 to 1,000. Right. But that was a much easier move because it was a much smaller number. It didn't take as much money coming into Bitcoin to move it up there. And it was so highly concentrated that most of the tokens never traded. They were being held by the early adopters. And so I discount those early years. I forget what happened back then. Anything that happened really before even the ETFs came around, that's not really indicative of the market today and what's more likely to happen. The last 5 years are a lot more likely to represent the current state of the market than the first 5 or the first 10 years, given that, now it's more similar. But with all the good stuff that already happened, all the hype, all that stuff, I don't know what's going to happen during the next 5 years to top what just happened. I think it's more likely that a lot of people that got in are going to want to get out, especially now with what's happening with Bitcoin and strategy. The lower Bitcoin goes, the the lower strategy is going to go, the lower stretch is going to go, the more pressure there's going to be on Saylor to sell, and the more people are going to want to sell. I mean, if you know that if you think he's going to keep selling common stock and diluting your ownership per share, you're going to get out right now. Okay? And the lower the preferred goes, the more debt pressure there is on the common, because the lower the preferred goes, that means, those guys have got to get made whole before you get anything in a liquidation. And ultimately, he's got to jack the interest, the coupon. If he doesn't raise that coupon, because he is required to raise it. If he doesn't raise it, all he can do is suspend it. But if he suspends it, it accrues and then the lawsuits. If he suspends it, imagine if he suspends the dividend, and stretch goes to $10, and people are down. These retirees are down 90%. You don't think so? This is going to snowball. The liability is going to snowball. The only thing that could save this would be a huge run up in Bitcoin right now.
Right.
And where is that going to come from? Look at the chart.
I don't know. Tether prints a whole shitload of stable coins out of thin air. That's happened before. Like you said, the government allocates taxpayer dollars to it, which is like that's right up their alley.
Do you have charts in front of you? Do you pull up a long-term Bitcoin chart? Look at that thing.
No,
I mean, it's a massive top. It's a head and shoulders. It's broken. I mean,
Another interesting risk that nobody's talking about too, that I wrote about on my Substack last week, is the political risk here. Like, crypto has been a defining feature of the Trump era. And so if he loses the House or the Senate or both in the midterms, it could really slow down his agenda as it relates to crypto. But also, too, I think if the Democrats take back the White House in 2028, they're going to suffocate crypto with all the Bank Secrecy Act regulations, all the AML, KYC. There's going to be regulations on this industry and an SEC and a CTFC that are proactive, completely reciprocal to how right now they're doing nothing about it. And I think that if that happens, I think that risk of if we have a Democratic president is substantial. I think that would be a huge negative for crypto, and nobody's talking about that.
Well, first of all, the hardcore, the real Bitcoiners that own their Bitcoin for the right reasons, for the reasons that I would have bought it if I bought it. They are libertarians, free market guys. Right. And so they tend to be more Republican because it is anti-establishment, anti-government, even though Trump really is a Democrat in disguise. He's a big government guy, populist, but he's really left of center. But he's the Republican, leader. And so he's a leader of people where you have, this anti-government independence. And a lot of the Bitcoin story is about that, right? So there was a lot of Republicans. But Trump made it a lot more political in that the Bitcoin money in 2020 race, 2024, went overwhelmingly to Republicans, particularly Donald Trump, right, as president. But also, in Congress and local and state offices, they paid off some Democrats too, right? They're agnostic, right? They want their guys in there. But it's more Republican. And Trump made it very much Republican. Not only is that going to be a problem when the Democrats have power, but especially if I'm right and Bitcoin crashes and a lot of people lose a lot of money, now it's the Republicans that caused that, right? This is a Republican problem. They promoted a scam. They hyped it up. And look at all these losses. Look at all this unemployment, misallocation of resources. Republicans did it. Right? They're bad, right? So that's there. But there is the regulation that's going to come. They're going to have a vendetta. They're going to want to go after the Republicans. And so they go after their wallets. They go after their donors. The big crypto guys, they wipe these guys out. They put these guys in jail. They can't support Republicans anymore. The Republicans are going to lose the House. That's like a no-brainer for, in the midterms. I think there's a good chance that they're going to lose the Senate. So the whole Congress is going to flip Democrat. And I think that we're far more likely to elect a Democrat president. I don't care who it is. And whoever we elect is going to be very far to the left because the Republicans have moved left. So the Democrats have to move left to create a contrast. And I think it's almost rather than the Democrats pulling the Republicans left, the Republicans are pushing the Democrats left. It's funny. Kamala Harris was accusing the grocery stores of price gouging. And Donald Trump said, "Oh, see, she's a socialist." Now he's accusing the oil companies of price gouging, right? It's the same.
I saw that yesterday,
yeah. So look, his policies are big government policies. He ran up the debt. The big beautiful bill was a disaster. But if you understand how politics has been working in the U.S., the incumbent party loses, the challenger wins. Right? That's happened 3 presidential elections in a row. Right? And the reason for that is very simple. The economy is bad and getting worse. But the incumbents pretend that it's great because they don't want to admit that the economy sucks because then they get the blame. So they talk about how great it is. They point to the stock market going up, or they point to some other bullshit government statistics. And they try to convince the voters, everything is great. I did a great job. The voters know from their own experience that everything sucks. So they don't believe that lie. But now you have a challenger who says, I feel your pain. Yes, the economy sucks. I'm going to fix it. Vote for me. I'll make it better. That's a lie that's believable. Because at least the guy is right about how bad everything is. When you're trying to tell somebody that it's great and they don't know how good they have it, they resent that. They're like, that's bullshit, right? So that's how Trump won in 2016. That's why he beat Hillary, because she had to defend a bad economy under Obama. The reason he lost to Biden was because he had to defend his own bad economy. And Biden got to say, I'll fix it. The reason he won in 2024 was because the economy was bad. And he said, yeah, I'll make it better. And Harris was stuck, trying to, continue it. So the reason the reason we're going to flip again, we're going to go back to Democrat, is because the economy is going to be worse in 2028 than it was in 2024. And the Democrats are going to say, look at what the Republicans did. Right. And one of the things that they did could be crypto. But there's a lot of other bad things. And so, crypto has a short runway to take off. So if a Bitcoin rally is going to bail strategy out, you got to have it now.
Right.
But look at the chart. Bitcoin seems to me like it's far more likely to keep falling than just reverse and go up, because it's already broken with risk assets. NASDAQ made new high, right? And Bitcoin didn't rally. It didn't rally with gold. When gold ran up to 5,000 and silver went up to $100, Bitcoin didn't rally with gold and silver either. So it didn't rally as a safe haven, like store of value digital gold. It didn't rally as a spec asset when all risk assets were going up. So it's correlated with nothing. Why would it go up? What would make it go up? What could possibly happen that hasn't already happened? There's no more good news. Everybody who wants to adopt it has adopted it. Everybody who wants to gamble with it, they already bought it. All companies. So but people, they're conditioned now. Bitcoin has had several big swings, and it's always come back. And that's, condition people to think that that's always going to happen. That as long as I hodl, I'm going to be rewarded.
Right.
It's always going to make a new high because it always has. Well, you got a very short period of time where you're looking at, especially if you cut out the early years when nobody really owned it and it was all play money. But I've been telling people, look, it works until it doesn't. It's going to make a new high until it doesn't. And the problem is, if you're just going to hold through every cycle because you believe that it's always going to go up because the trees grow to the sky, that it's never going to top, then you're going to lose almost everything, because you're not going to know that pattern has broke until it's too far down to come back. And I don't know where that might be. I forget, we take out 20,000 or
And there's
10,000.
no tangible, like there's no tangible book value or cash flow stream underneath it all to be able to say, okay, like here's where it gets to a point where it makes complete sense. You know what I mean? If an equity is trading with a tangible book value of $10 a share, and they're earning $1 a share a year or they're spitting off $1 a share a year in free cash, and the equity goes to $8, you almost have to buy it. I mean, it's like, unless it's unless its
Yeah, I
growth
mean,
is regressing. But in this case, it's just price. So it's very difficult, other than comparing it to other tangible assets, like how does it trade against oil, how does it trade against gold? But there really is no underlying
yeah,
signal that
yeah.
determines. Other than
Bitcoin,
M2, right? Other than the amount of money printed, which is
right? Well,
what people will argue.
Bitcoin hasn't been around long enough to have a relationship with like other things to say, is it cheap or expensive relative to gold, relative to oil, relative to the S&P? It doesn't have a long enough history to make
Right.
those. So, but it also doesn't have any objective way to measure value. It doesn't have rent. It doesn't have interest income. It doesn't have dividends. So when people say Bitcoin is cheap, it's not cheap because you have no value basis upon which to make that determination other than its own price history. So you can say, oh, Bitcoin is 60,000. It's cheap because it was 120,000. Okay.
Right.
But I could say 60,000 is expensive because,
Right.
it was $60.
Right.
I mean, the same thing. So if you look at where 60,000 is in the life of Bitcoin from day one, it's a high price. It's not
Right.
cheap. Now,
That's why
it's lower than it was, but it's like, you go to these stores, that have, hey, they have the price of something, some overpriced jewelry, and then they put it 70% off. And it's like,
Right.
oh, look, it's 70% off some ridiculous price that nobody ever would have paid. That's just how they sell jewelry in jewelry stores. They mark it down from an outrageous price. So you think you're getting a good deal, right? And so it was when Bitcoin was 120,000, it was an outrageous price. 60,000 is just less outrageous, but it's
Right.
still expensive.
And it's why too, like, I've done research on the short side for a long time, a decade plus, and been around, the best short sellers to ever do it. And so many times you hear from people talking about a company who's, completely insolvent or on their way to being completely insolvent, that they'll say, oh, it's a better short at $1 than it is at $10. And it's like, how could that possibly make sense when it's already fallen 90%? It's like it still has 100% to fall, right?
Yeah. Yeah. And even when stocks go bankrupt, though, they seldom go to zero. I mean, they might eventually,
Right.
but the stocks just go up. They get delisted. They go to the pink sheets. There's a bid. Somebody's
But the
there.
equity goes down 99.9%, which
Yeah,
speaks to
and that's
your
why.
case before about the capital structure of.
Yeah, like I was on Fox Business with Anthony Pompliano, and he got me to say, "Look, I don't think Bitcoin's going to zero." And he's like, "Oh, this is a major concession, a major victory." I'm like, "Yeah, it's going to get close to zero." The reason it probably won't go to zero is there's such a big cult now. I'm sure if Bitcoin was $100, somebody would buy it. I mean, there's going to be people down there. But even if Bitcoin finds support at $1,000, which to me is still too high, but let's say Bitcoin goes to 1,000 instead of zero.
Right.
For all practical purposes, if you bought it at 100,000, it may as well be zero. You've lost 99% of your money.
Right.
So does it really matter that it's not zero? No, it doesn't really matter at all. But the money that people are going to lose in Bitcoin, it's not just the money they lost in Bitcoin. It's the profits that they gave up by not investing in something else. You could have bought something else instead of buying Bitcoin.
Yeah, but that assumes that they're going to make a good. That assumes they're going to make a good investment elsewhere. I don't like that. Like logic.
Well, they could have just bought
Bitcoin all
gold
the time. That's like all those people that say, "Oh, Peter, you cost me money by keeping me out of Bitcoin and 10 years ago." It's like, look, you make your own decisions with your own capital. And to your point now, similarly, like you can't guarantee that money would have been put elsewhere where it's going to
Well, who knows? Well, first
great
of all,
things, but
there are a lot of people that credit me for buying Bitcoin 10 years ago. That they only know about it. They found out about it because I told them not to buy it. Then they looked into it and they decided to buy it anyway. Look, some of the guys, what are the co-founders?
You're not helping. You're not helping your case.
One of the co-founders of Ethereum, right? The co-founder found out about Bitcoin because of me. He owes his billions to me. He thanked me personally as, hey, he said, you're probably the only reason we have Ethereum. If I hadn't listened to you and bought Bitcoin, we never would have come up with Ethereum. So like, there are a lot of guys that didn't buy Bitcoin because of me, and there's a lot of guys that did. So, but because I was around in the space talking about it long before most people knew about it, long before most people who own it. But, I think I've saved a lot of money for people because a lot more people wanted to buy Bitcoin at 50,000, 60,000, 70,000, 100,000. And if I convince them not to do it, they're better off, right? And they're better off if instead of buying Bitcoin, they bought something else. I had a lot of recommendations, things that I recommended. And in fact, yes, personally, I would have been better off had I bought Bitcoin when I first learned about it in like 2010 or 11. I would have been better off had I bought Bitcoin than had I bought anything else. I mean, it would have been the single best investment of my life had I bought Bitcoin back then, right? Like at $1, wherever it was. But I'm better off having not bought any Bitcoin over the last 4 or 5 years because what I bought instead of Bitcoin did really, really well. So yes, not getting in early was a mistake, but not getting in later was not a mistake. And there are a lot of people that I know that bought some Bitcoin early on, but bought more, averaged up. And so that overall, they're not up very much, or some of them are down.
Like Saylor.
Saylor's a perfect example. He's been buying Bitcoin for 5 years, every week, averaging in. Somehow he manages to buy the high of every week, but he buys the high every week. He's down $11 billion. His average cost is way below his average price. He could have bought anything else but Bitcoin, and he would have been better off. But if he was buying anything else, he wouldn't have raised all that money. The only reason he was able to raise all that money is because people were dumb enough to give it to him because they wanted to buy Bitcoin. But they wanted to buy it through strategy to get the positive Bitcoin yield. But it was all self-fulfilling. But that whole virtuous cycle is now a vicious cycle. So the party is over. And, so I've saved, I think, people more money. And of course, they haven't closed the book on it. If I'm ultimately right and Bitcoin does crash to 1,000, right, or whatever it goes to, and 99% of the people lose money in Bitcoin, even the people who think, oh, if I'd only hadn't listened to you, Peter Schiff, there's a lot of people who didn't listen to me, bought Bitcoin, and they're going to lose a bunch of money. Because if you are a hodler and you have never sold any Bitcoin, you didn't make any money yet, right? That's the Kenny Rogers song, don't count your chips when you're sitting at the table. So if all your chips are still at risk on the table and you think you've made a lot of money, believe me, I've been in poker games where I had a lot of chips and then I lost them. So it's not real, And I've been in plenty of casinos where I had a lot of chips, right? I don't leave the casino with those chips. So
me too.
You don't. So people are going to lose a lot of money. And some people are going to go broke because there are a lot of people that borrowed against their Bitcoin. Some of the early guys, they're going to ultimately get margin called out. They're going to sell what's left of their Bitcoin, but it's still going to be at a gain on paper because they bought it so early. And they're going to have a tax liability, but they're not going to have any money to pay it because they already spent it. So a lot of people are going to go bankrupt. Even though they make money in Bitcoin, they're not going to have enough money left over to pay their taxes when they get margin called out. So look, the book is not finished on this. So all you guys that think that Peter Schiff costs people a lot of money, a lot of people are going to be saving a lot of money. But yes, if I had talked you out of buying Bitcoin when it was $100 and you were going to buy it and you cashed out, yes, there are people that could have made a lot of money But I never just told people you can't buy it. What I used to actually tell people is, look, if you want to gamble on it, it may go way up. I remember when it was at 5,000, I said it can go to 50,000. And the reason I said that, I said if it can go to 5,000, it can go to 50 because it's just as ridiculous. It's not worth anything. So who's to say it can't go there? So I was telling people, if you want to gamble on it, then gamble on it. Just, it's not an investment, but, people gamble on sports, they gamble in casinos, bet on horses. So yeah, you want to bet on it? Bet on it. So I told people that, but I at least said, put money into Bitcoin that you can afford to lose because it could collapse. So there are people that did that. But what Saylor did, and I mentioned this earlier in this discussion, he didn't tell people to put the money that you can't afford to lose into Bitcoin. He said, put the money that you can't afford to lose into Bitcoin. He said, everything needs to go into Bitcoin. You can't just put 2% or 5%. He was like, push it all in, and just roll the dice and bet it all on Bitcoin. In fact, do more than bet it all, bet more than it all, borrow money and shove that in on the table. Right? That's what he was telling people to do. And I, there's all kinds of recordings out there. I mean, the evidence is overwhelming. And I even thought, hey, Saylor hasn't been on television the last couple of days. I haven't seen him anywhere. Have you?
He did do one interview. I actually just saw it popped up while we were talking on X, and I'm not sure. I don't know what the podcast is, but Zero Hedge has an article called "Michael Saylor Responds to Scrutiny as Strategy Shares and SRTC Hit 52-week Lows."
Yeah, I
don't know where this interview is though, but I'll watch it after.
Because I bet the lawyers have gotten to him and said, you know what, here's things you can't say anymore.
Well, let's end on that note. You read my article today. My article today was called "No Accountability." It wasn't just about Michael Saylor, but it was about Kathy Wood and Tom Lee and everybody that has at one point, I guess, done well, and then has been continued to be invited onto financial media. Kathy Wood's a great example. It was in the right place at the right time with Tesla in 2019 and 2020 and has consistently underperformed the NASDAQ since then and gets TV time anytime she wants it. And I thought you made a very good point yesterday when you tweeted out, basically, how can this be such a grand news story on the way up and on the way down, nobody's talking about it? Because it really is a spectacle to make such a big deal out of it on the way up. And this isn't just Bitcoin. It's anything, it's SpaceX, it's NVIDIA, whatever. But it really is something to make a spectacle out of it and make it your programming every day on the way up. And then all of a sudden, when the shit hits the fan, stop talking about it instead of some type of accountability, consequences, ownership, or admission that, we or the guests or somebody had it wrong, right?
Yeah, look, and this is why I've been warning for years that, let's say, networks like CNBC, they've got liability here too. And I do expect the networks to be sued and maybe even specific anchors. But CNBC holds itself out as objective, right? That it's a place to go for financial news and for investors to get information to make investment decisions. But it's actually a business, and their goal is to generate income. And they generate income by getting viewers and by getting advertisers. And the advertisers pay, the viewers don't, but the advertisers pay because of the viewers. So you get more viewers, you get more advertisers. Right? Who are the biggest advertisers on CNBC? It's crypto companies. And they're also trying to get an audience that is invested in crypto to hear all these crypto guys blow smoke up their ass, but also to convert their audience into crypto. And so CNBC becomes biased in that they want the crypto companies to advertise. So they want to be friendly to crypto guests. They want to be bullish about Bitcoin. So more of their audience buys Bitcoin. So now their audience is demographically more valuable to the Bitcoin advertisers who will keep advertising. And that's why, if you looked at CNBC, you would think that almost everybody is bullish on Bitcoin because their guests are pretty much all bullish. They don't invite people on that they know are bearish on Bitcoin crypto. They're out there. They outnumber the bulls, but they're not there. And they also treat them, they don't question their objectivity. Back when they used to have me on years and years ago, if I recommended gold, they would say, well, come on, Peter, you got a gold company, right? You're just trying to sell gold, right? You're just scaring people. You don't really believe this, right? You're just talking your book, right? I got accused that a lot. I've never seen a crypto guy, Saylor, for example, accused of when he says Bitcoin's going to 10 million. They say, come on, do you really believe that nonsense? You're just saying that because, your strategy, you almost big. Nobody questions him. The stuff that he says is so ridiculous. So, the stupidest stuff. He makes it sound intelligent because he uses, bigger words, but pure nonsense. And nobody pushes back. There's no real hard questions. It's all softballs. It's all friendly.
Right.
And so the average viewer doesn't realize that this is all rigged. This CNBC is like a gigantic infomercial. And yeah, Kathy Wood is part of the script there. She's, because she's, hyping up all these stocks, and they never take her to task for all the money that she's lost. And
right.
The only time I ever see, to the extent they get a guy who's been bearish on the market, yes, they'll say to that guy, well, why should we listen to you? Look, how long have you been bearish on the market? Oh, yeah, you're just a perma bear, right? You don't know what you're talking about. They never do the same thing with the bulls who are hyper bullish on shit.
Right.
And they're look at all these forecasts of $200,000, $300,000, $400,000. Look at Tommy Lee. Why do they keep asking this guy? So Tommy, where's Ethereum going to be? He doesn't know. He's just going to say this high price. What you think he's ever going to say? Well, I think Bitcoin is going to go down about 50%. No, he's not going to say that. It's like
I don't think any of the anchors could tell you what Ethereum is. I don't think they could tell you how it works. I don't think they could tell you, how the smart contracts work, how it functions.
Yeah, they'll say, "Oh, Bitcoin is down today. We invited a Bitcoin expert on to say what you should do." Who is the expert? A Bitcoin salesman, a guy that's in a Bitcoin. What is he going to say? Buy. This is a great time to buy. Buy. This is, it's the greatest. So yes, they're hiding. CNBC, I look at it, I'm just, are you going to mention it? When I want to see, how are you going to handle this? And they don't even discuss it. Like I just heard the other day, somebody mentioned it briefly. They talked a little about Bitcoin being down, but this should be a big story about what is happening to these securities, especially since they promoted them so heavily for so long. And now they're crashing, and they know a lot of their viewers own strategy and own stretch. So why not hey, cover it? They're just hoping nobody notices. They don't want to touch it. They're hoping maybe that, hey, if we ignore it, maybe it'll just come back up. Because if they actually covered it, there might be more selling. Especially if they had a guy like me. They're not going to have me because I've been banned. But they might have somebody that has an opinion like mine.
But I'm glad that you've been banned, because then you reach out to me when you have something to say. Hey, anybody that is sick and tired of watching the mainstream financial news, comes over and subscribes to, to my blog or to Zero Hedge, or they read your articles on Schiff Gold,
or they listen to the Peter Schiff show. I'm doing my own podcast.
And they don't have to stay in the echo chamber. I try not to stay in the echo chamber too, but it is good to have a counterbalance to at least get yourself 50% of what the skeptical side of thing or the Austrian side of things are. If the rest of everything else is going to be, the tailwind is essentially going to be, hey, MMT and, crypto's fine and, total euphoria, which is really the world, the investing world and retail investors right now have been just brainwashed completely. The system is laughable. The fact that both parties kind of advocate for money printing, and there's this huge fight against inequality while they're, pouring gas on the fire. So it's
Yeah,
nice that you come on.
yeah,
Go ahead.
and your article, I read your article, which was very well written.
Thank you.
And yeah, like, I use my X account, which, I have it. I have over 1.5 million followers now. But I pointed out the fraud and stretch. The mainstream media refused to do it. They never pointed this deceptive advertising out, the way this thing was being hyped up and promoted as safe and secure. And I was saying, no, no, it's obviously not. These are lies.
I watched the interview with Brian Sullivan talking to Michael Saylor this morning when he came on to announce STRC. It was from like a month or two ago. It's in my article that
No,
I
but
wrote
Stretch has
today.
been around
And
a lot longer than a month.
right. And Sullivan does say to him at some point, like, what about people that say, like, come on, 11%? But really, what would be a great way to inform the viewers would say something very simple, which is like, hey, like if the federal funds rate, if the Fed is offering banks 3.5%, you have to know that anybody that's offering you more than that, quote unquote guarantee from the Fed, if we just want to call it that, is taking some type of risk with it. And the further away from 3.5% you get, the more risk they're taking on.
Yeah.
Simple statement, one sentence. I just said it, but summed everything up perfectly.
And
when junk bonds trade, junk bonds are trading at 6 to 7%, and this is trading at 11%. That should give you some type of relative indication as to how much risk there is.
Of course, because if he could have borrowed the money at 5%, he would have. The fact that he had to pay 11 means that what he's doing has a lot of risk, and that's why you have to offer a higher return to get people to assume that risk. But when I was writing about it, and I pointed out that the whole thing was a Ponzi, which of course it is. Right? The way the structure works is you raise money from new investors to pay out the old investors. There's the business itself doesn't generate any income, so there's no way to service the obligations other than taking in new money from new investors, so you can keep paying your existing investors.
Or it generates minimal. The business generates minimal income.
No, but it's not. There's nothing. It's so it's a Ponzi. And I said normally, the way a Ponzi is the yield is too good to be true. Somebody offers you something that's too good to be true. There's a good chance that it's not true, and that it's really a Ponzi, right? And that's how I knew Mashinsky when he was telling me the yield he was paying on gold and Bitcoin. I knew that was impossible. So I said, if you're paying that yield, you must be either you're taking some incredible risk or you're just running a Ponzi, because it can't be done in the manner that you're describing, right?
Right.
And so strategy is offering this too good to be true yield, but you didn't have to figure out that it was a Ponzi. The prospectus told you it was a Ponzi. So this was he ran the first Ponzi that admitted it was a Ponzi. And there were other people that are telling me, well, Peter, it can't be a Ponzi if he tells you. I said, no, yes, it can. It just, because you're honest about the fact that you're running a Ponzi scheme, it doesn't mean it's not a Ponzi scheme just because you're honest. It means that the people who are actually buying it are complete idiots because they're actually getting into a Ponzi scheme on purpose. That's how crazy it was. And it's because a lot of people didn't read the fine print, because all they did is see CNBC interview, or they followed Saylor, and they didn't bother to read. And in fact, like that ad that you showed, right, that you in the article with the AI girl, in a bathing suit, sipping, a Mai Tai on the beach, retired on her stretch. At the end of that commercial, there is a disclaimer. And of course, I can't, the print is so tiny and it's on the screen for, a nanosecond. So you'd actually have to freeze it and blow it up. Who the hell, people are scrolling, they see that thing on TikTok. They don't even stay around long enough to see that fine print and that microscopic disclosure that says it's a risky investment, you can lose all your money, right? So nobody sees that. They just see this girl sipping a drink and saying it's all because I'm getting 11% on stretch. So I knew this is a fraud.
Yeah, well, time will certainly tell the tale, and you definitely had Mashinsky nailed, and that was one of the reasons I wrote to my subscribers back in April to pay attention to what you were saying about Stretch, because you had identified the other one. And whether or not your prediction plays out, we'll have to see. But at least people know that you have a track record of calling out such things, and I think
Well, let's put it this way.
that should be.
I was saying this about Stretch when it was still at 100. All right.
Yes,
So
exactly.
I didn't
exactly.
so I anticipated what's happening now. I said this was going to happen.
Right.
And so because I understood it. And that's why, again, this is, and as you know, we're looking here. I mean, Bitcoin is still hanging out below 60,000, and Stretch is down again today. It's off the lows. It's at 74.85, but it almost got to 70 even. It got below 72. People were down more than 28%, more than they would have been down if they bought Bitcoin. That's the crazy thing. It turned out to be riskier than Bitcoin, not safer than Bitcoin. That's why this lawsuit, I mean, if I was a lawyer, I would be all over it myself. I would just get a bunch of clients and I would file the lawsuit. It's easy money, But obviously, lawyers will do it. Wherever people lose money, the lawyers are going to show up.
Correct. Yeah, there's already been somebody soliciting people for a class action. So
yeah, there's one so far. There'll be more. And that's it. The lower the price of the stock goes, the more money there is in the lawsuit. Right. The only problem is if it goes so low, Strategy can't pay the claims. Strategy will be broke. So that's going to be a problem. The collection could be a problem because there may not be enough equity left there. That's the problem.
So we'll end on this. We'll end on about 3 hours before the interview today with you. I did go on X, tag Saylor, said, hey, you're more than welcome to come on if he wants. Would love to have him on. If he doesn't want to come on, he's got something to say, he emails me a statement or something in full. I'll publish the whole thing in full on this article and on this write-up when I write it up for my Substack. So would love to hear from him, would love to hear his side of the story. And it's safe to say that you would debate him, right? If he wanted to debate you on this?
I would debate him right now. I mean, they tried to get him to debate me at the Bitcoin conference I was at in Vegas. He refused to debate me. He mentioned me twice in his keynote speech, but he wouldn't debate me. So I would debate him. In fact, I forget who it was that interviewed me recently, who had interviewed Saylor, a few weeks earlier. And he asked him about me and my criticism of Stretch. This is before the big drop and Strategy. And he said, well, that's Peter Schiff. He just criticizes everything related to Bitcoin. So just because I'm a Bitcoin bear, he just didn't even deal with my criticism of his products. Right. And, even if you like Bitcoin, you can still see the fraud in what's going on here. But yes, if you are super bullish on Bitcoin, if you really do believe that even without Strategy's buying, Bitcoin is going to 200,000, 100, a million, 2 million, then I guess you think that it's going to work out. Right. Because it's all based on Bitcoin. But
correct.
If Bitcoin does not go up, let's say Bitcoin just stays here, Stretch is going to zero. And the Stretch investors didn't sign on to that.
Right. No, it's all based on the underlying assumption that there's going to be 11% in yield to strip out of the gains on an annual basis.
Yeah, when I listened to Saylor describe, his business model, and he admitted you could do this with anything. You could do it with gold. You can do it with the S&P 500. He said the problem is the returns aren't high enough. Says the reason that we could do it with Bitcoin is Bitcoin makes 30% a year. So we can give away the first 11% because it's 30% a year. I'm like, what do you mean Bitcoin is 30% a year? Based on what? It's not guaranteed to make 30% a year.
Correct.
You're crazy. You're basing your entire investment on an assumption that a digital token that has no real utility is going to go up by 30% a year. That's the premise. Defend that in court. Defend that in court.
It's why the number one disclaimer on anything financial related is past performance is not indicative of future results. That's why that's the first line of every disclaimer. So, all right,
and
listen, hey.
But in order to make the 30% claim, you have to ignore the last 5 years. You got to go back to the beginning of Bitcoin and say that it's going to go up 30% a year. So it's an indefensible position. I would chew this guy up in court. In fact, if some of these lawsuits are smart, they'll just call me as an expert witness.
There you go.
And they're done. And I would do it for free. They don't have to pay me, so that way they couldn't say, how much are you being paid, Mr. Schiff, to say this? No, I'm not being paid anything. I'm just a good Samaritan.
Yeah, maybe we'll get you in front of Congress again too.
Yeah, well, I testified twice, and the guy who invited me got fired last time, and nobody has the guts to invite me again.
There you have it.
You can watch if you haven't seen my congressional testimony. Go to YouTube and go. Mr. Schiff goes to Washington, and Mr. Schiff returns to Washington, and my testimony is there. You'll get a kick out.
Yeah, they're great videos. They're good watch. There's a couple of great lectures on your on yours too. One was like why the mortgage crisis shouldn't have surprised anybody. There's another one about the Fed that you did, I think, at one of the libertarian think tanks. There's a lot of great lectures up there. So, anyways, Peter, look, man, thank you so much for giving me and my subscribers an hour on a Friday. I hope you enjoy the rest of your weekend.
All right, I'm doing my own podcast in about an hour or two. I got to start recording, so I got to go rest my voice.
All right, well, I'm going to try to rush this out before you do that then.
All right, take care.
Bye. All right, thanks, Peter.